traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is Monday, the 5th day of July, and this is the Daily Report. Forex Gold is currently trading $2 to $3 lower at 1208.55. I expect an extremely quiet day, as this in the United States is the last day of a 4-day holiday, Independence Day. For those of you who watch the show and have been with us for a while, you know that our Elliott Wave count is nothing new. We have been using it as an effective tool ever since the inception of the Forex Gold forecast. We have been speaking about the fact that I truly believe at this point that this last Impulse Wave 5 brought the beginning of our corrective phase, and that's going to be a series of waves A, B, and C. A being a corrective wave, B being an impulse, and then C being a last corrective wave before we start the cycle over again and go into our impulse phase, waves 1 through 5. Fundamentally and technically, I'm absolutely bullish. But traders, I do believe that at this point, we need to weather this corrective phase. We have been talking on the last few days about some types of the Elliott Wave in terms of corrections that we can actually witness in the market. I believe on the weekend we talked about a classic, what's called a zigzag pattern. And that would look something like this. In other words, the market, if it does find tentative support here at 1203, which is what I'm looking at in terms of a Fibonacci retracement level that's very strong, we would get our impulse B. We would get a final corrective C, and C would have a lower low than our A wave, and then it would go back into the impulse phase. The flat correction would look something like this, kind of forming a W. In other words, the distinguishing factor is that you would have a series of very similar or equal lows and then moving back into the impulse phase. However, as you can see from down here, this is an illustration of the types that are available in terms of corrective patterns. The zigzag, we talked about the flat. There's still an irregular horizontal triangle, the double three and the triple three. So that as this market does work itself out, and if in fact we are correct and we are going into a corrective phase, we want to pay very close attention to, as quickly as we can, identify what type of corrective patterns we're witnessing. Traders, I've pulled up a weekly candlestick chart, and we're looking, this is of course last week's activity, the beginning of this week. Right now, of course, the star has no meaning in that it's only been trading for a short while. But what I did notice when I took a look at it this morning, our longest term, let's call it our trend line, drawn from this low and this low, obviously we've still got a target 1180. It's in no way even come close to breaching the market or coming to that point. But when we look at our shorter term, in other words, from this low here to this low, and we match all three up and extend that, you can see that we have received a clear break from that lower trend line, so that what I'm looking at is, in terms of a potential correction, the next real support level in terms of long-term trends on a weekly chart is at around 1180. And of course, when we look at our daily in terms of the trend line, well, of course, here it's absolutely broken. I'm drawing it from this low here and this low here, extending this as our support area. And you can see we clearly broke through that when the market sold off last week. My personal take on the market is that we are going to and are truly experiencing a defined correction. Interim and long term, I am still absolutely bullish on this market. My sentiment is that a typical corrective phase typically might take 2 to 3 months in gold. If we look back to this last major move in gold. Now, this was our contract high back in December of 2009, and we had the following. We had our final B wave here, and then we went into our corrective phase. When we went into our corrective phase, it was just at the end of November, so we had December, and then January, right at the beginning of February, we had that final C wave signaling the bottom of the market, because here we went into our impulse again, waves 1, 2, 3, 4, and 5. So my big question at this point is, how will gold react in this area, specifically 1203? That to me is a critical support level. Let me show you why. As you can see, I've added our Fibonacci retracement sequence, and I'm placing it from this low here, the beginning of wave 5, and then 1265, our absolute historical high. And the interesting thing is that in terms of retracement levels, as you can see, it's 1202.95, call it 1203. This is a very critical area as far as I'm concerned, and this is a support area that must be held. If not, my sentiment is it will probably go and test this 1186, 1187. So traders, as the market begins to pick up and steam again, as our traders return here in the United States from a long 4-day holiday, let's see what kind of reaction we get. Let's see if the market in fact will move back up. If so, I would look for it to stall probably at around 1224 to 1226, and that's of course based on this Fibonacci level right here. And if that's the case, we would then go into our C wave if in fact this A wave is over, because until we are in our absolute B, I cannot with any kind of certainty tell you that this A wave is over. This has been Gary Wagner with WFGForex.com, your daily market update for Forex Gold. Wishing you, as always, good trading. We'll talk to you tomorrow. Bye-bye.
When I look out my window, many